Welcome back, everyone. I hope you're all doing fine and well today. So, last week we saw gold and DXY, which is dollar index, fell drastically. Okay, gold fell with around 6%, while we see DXY fell with something around, give or take, 2%. All right. So, why is this happening? We saw dollar fell at the back of the quarterly GDP that came out last week, Thursday, which kind of came quite bad compared to what was forecasted and the previous. Okay, you can see this is June 26th, which is last week, Thursday. So that the actual quarterly GDP in the United States came quite crazy, okay, negative 0.5%, all right, which sort of just tanked the whole positive vibe that I've been having considering the dollar, all right, considering what I've seen in the economy, what the Fed are saying, the plan to probably increase, to cut through it maybe in September or possibly, the next month after that. But as time goes on and based on the data that keeps coming out of the United States, it doesn't look very good, considering Trump still going back at Canada with the whole tariff thingy. Okay, it's not looking very good for the dollar. But what surprised me the most is the fact that gold actually did drop crazily last week as well. Okay, as you can see, on Friday alone, we saw a whopping up to 5%. So no, not up to 5%, excuse me, around 1.62%. But if you calculate what the drop for the whole of last week, for 5 weeks, or let me just take it to the for 5 days, excuse me, let me take it to the weekly time frame. You see that it dropped with over 2.8%, all right, roughly 2.8%. And if you take a week after that, that's around 1.86%. That's a roughly 5%, okay? Since we got the all-time high right here, DXY has dropped with around, how many pips is that? How many percent is that? 6.8%. That is significantly huge, all right, considering the pump that we've experienced in the past couple of weeks, couple of months. So where do we go from here? What's going to happen to the DXY? What is the economy is talking about? Those are the things we're going to be discussing today, okay? Then I'm going to talk about my trade recommendations. I'm going to talk about my trade setup and the trade I also have open. And then we're going to wrap everything up, all right? So why don't you sit back and let's get straight into the show fully. So right now we're going to be starting with the the economic surprise meter of the 8 major pairs, okay? 8 major currencies, literally, okay? So the line right here, USD, or let's just say DXY, is around 46% weak, okay? Personally, considering what I'm saying, I will actually give it something below 46%. It has lost all the support I have for dollar right now. But then, I won't be shorting dollar blindly, okay, because there are so many sentiments that surround the month of July, okay? So many data are coming out. We have NFP coming out, we have the CPI, the PPI, all these fresh new data are coming out. So we have to watch and wait. And then the old Donald Trump, the big fat bill or big beautiful bill that was passed, I think it has passed the second stage in Congress, so probably it's already inactive. I can't really tell about that. But all these things are going to be factoring into what we see in the price of DXY moving forward into next month, into September, and to the end of the year. So I'm being very calculative and very cautious on how I approach the dollar moving forward. As far as the pound is concerned, pound is still very strong. As a matter of fact, a pair like pound dollar, all right, GU actually rode on the weakness that happened in the United States. I'm talking about the the GDP quarterly growth that came out last week, all right, that came very, very bad for the dollar. It rode on it, and we saw a whooping around 320 pips, right, just about last week alone. And I forecasted that, look for a buy opportunity, and that seems to work out very well, all right. So on Euro seems to be quite neutrally bearish as well. However, these also kind of like rode. I'm talking about Euro dollar, also rode on the fact that dollar is also weak, okay. Yen is neutral. Since last week, we have NZD still staying pretty strong at 75%. We have CAD with 50%. And now we have another thing with the CAD is that we need to factor the whole shebang that happened on Friday when Donald Trump kind of just snapped and said he's going back on the tariff with Canada, like 50% thereabout. We saw that spike, that crazy spike and dump that happened on the pair like UCAD. We're still going to talk about that because I'm currently shorting United States dollar, UCAD, literally. So we're going to see how that goes, okay? But as time goes on, all this tariff thingy, it's very hard to kind of follow because it can change rapidly. Trump took it upon himself to post it on his true social handle or page, and then the market kind of like torpedoed from there, took the action from there. And maybe by next week, something else will happen and it will just change the whole thing. But it's very hard to track how tariffs affect the market. As a trader, you have to be cautious. You have to prepare for the unimaginable to happen because since Donald Trump actually became the president, it's been a bunch of unimaginable stuff that keeps happening every now and then. So we have to be ready for everything. So another thing that we need to plan for is next week NFP, the labor data that's coming next week. So it's going to be a full blown in the United States, okay? And then also 1st of July, we also have the Bank of England governor speech. We have a couple of speeches, as a matter of fact. We have Bailey speech, Bank of England governor. We have Bank of Japan governor also had a speech. We have Fed Jerome Powell also had a speech, okay? On the 1st of July 2025, this year, literally. That will be on Tuesday. So those are going to be very, very interesting. Lagarde also had a speech. It seems like it's going to be like a bunch of places that all of them kind of like sit together to have a conversation, I believe. Because I don't really understand why all of them got a speech at the same time. Yeah, at the same place. I guess it's at the same place. They all have a speech at ECB forum. Yeah, so we're gonna have to listen to them to see what they have to happen. So you have to prepare for that, especially because it's gonna move the market. But then we have to prepare for all the job opening. We have to prepare for the ADP. Okay, we have to prepare for the ADP non-farm payroll employment change. We have to prepare for the hourly earnings, non-farm payroll, unemployment rate. They're all coming next week as well. The normal monthly data, they're all coming. So we have to prepare for all of that as well. It's gonna be a very interesting week, I will tell you that. So better get ready. We're taking a look at the dollar economic heat map right here, the US economic heat map. It's still very tricky. Okay, the labor data are still very much holding on. They are keeping dollar strong. Okay, they're keeping it very, very strong. All right. I mean, or let's just say it's moderately keeping it strong. The inflation is heavily slowing down. The wage growth is also very decent, which is part of the labor data. However, the economy is slowing down. Okay, it's more like contrasting. We are seeing a reduction in the manufacturing PMI. We are seeing a contrast in the service PMIs, and we are seeing a massive, massive shrink in the GDP. Okay, in the United States. So money is not flowing in the United States. They're not generating any internal revenue, but they're just they're importing things as quick as possible. So it's affecting the market. And then when you consider the government spending, the military support, the military aid that's been happening since Biden left the office as well. I heard about Somalia conflict with the United States. The UTs is there. They just concluded with the one with Iran. I hope that's everything. They've been supporting, they've been funding and supporting Israel with Hamas for a very long time, with the Jordanis, with the Lebanon. It's been crazy spending for the United States. They've been like a Santa Claus for a while. So this is not really helping the GDP growth because they're spending more than they are making, literally, unless they're printing so much money. Okay, so that's the only way you can sustain all of this. And at the same time, it's just going to crazily increase inflation if you keep printing money. So it's not been very good for the dollar. But let's see how it goes for this month, because we have anticipation that probably the Fed are going to say one or two that will help the dollar. And in September, we're going to start seeing the rate cut, potentially. I'm not sure. We don't know anything yet. We'll never give a sign of cutting, but we have analysts that say there's a possibility for 2 rate cuts this year, as a possibility of 3 rates cut this year for the United States. Nobody really knows. Or next week, when the whole of them, the bunch of all the central bank personnel, okay, people, the high rank personnel in the central bank of all these major countries in Europe, in the UK, in Japan, and the US, when all of them finally stated their plan for the rest of for the remaining half of the year, at least we're gonna know how to better prepare ourselves going forward. Okay, so that's more like where I stand on the economy right now, and you can see on the economy surprise meter, dollar is not very strong. It's actually messed up right now. I won't suggest anybody buying dollar right now. If you want to short it cautiously as well. Pound also is not very strong, so pound dollar might be a pair that if you're buying pound dollar right now, as I am buying, where is it again? Pound USD right here. Yeah, if you took a very good entry on pound dollar, you might want to hold off on this trade. Just hold it tight and watch it cautiously. Okay, if you're not in it yet, potentially you can look for a nice pullback. We're still going to discuss this later and look for buy opportunity moving forward. All right, but when you look at the pound, okay, the pound itself as a currency, or let's say the United Kingdom economy itself, it's more like on an average. So the whole strength that is happening in the United Kingdom, it's more like riding on the back of dollar weakness. The same thing goes to the euro. All right, the eurozone. The same thing goes to the yen. Okay, the same thing goes to Canadian dollar. Same thing goes to the Australian dollar. Same thing goes to the USD CHF. All right, everything is more like riding on the weakness of the dollar. All right, it's as simple as that. Not like most of them are very strong that they can actually take charge of the whole momentum in the market that we've seen over the past couple of weeks or even a month or more than that. But it's just that the dollar has been very weak that they just had to like sprout and just boom off. And for some of you that have been buying all these pairs, congratulations to you. Although I have been focusing more on the indexes, okay, on the stock indexes. I've been focusing more on the yen pairs and the minors, okay. I only trade major pairs on my 15-minute day trading strategy, 30-minute day trading strategy, more like that. I don't really swing it like that because of the inconsistency with the dollar, inconsistency with Donald Trump speeches and everything like that. His posts also are very, very crazy. Okay, so all these things are the one that have been keeping me off the back of the dollar, just to protect my capital and to protect my sanity as well in the market. It's been crazy, I must tell you that. So jumping into the chart real quickly, before we talk about that, let's take a look at the top setup that we have right here on Edgefinder. First up, we have euro dollar still very bullish. I mean, euro dollar is awfully very bullish right now. Okay, with a score of 10, Kiwi bullish with score of 7, Eurgbp bullish score of 7. I'm not interested in any of those three, but I'm pretty much interested in NZD dollar. All right, we're going to talk about that as one of my trade recommendations. We have gold bullish score of 7. I'm very much interested in buying gold as well, so one of my trade recommendations as well. Aussie dollar bullish score of 6. I'm not interested in that. Nasdaq is also bullish with score of 6. Okay, however, I have my trade on Dow Jones still running very well right now, so I'm not going to add Nasdaq to it. And Nasdaq's awfully very, very high right now to even buy. So we'll probably wait for some correction and then we jump into Nasdaq moving forward. NZD-JPY bullish with score of 6. I have a trade running on NZD-JPY. I'm very sure if you've been watching my videos, you know that already. Silver bullish with score of 6. I'm still waiting for a very deeper pullback on silver before I look for buy opportunity. But I can actually go ahead and buy gold right now, unless gold still want to dip further. We're going to talk about all of that moving forward. Pound dollar bullish with score of 5. As a matter of fact, pound should be among top 2, okay, because it's pretty bullish, like very, very bullish. Well, I mean, we have it right here. Eurgbp also bullish with score of 5. I have something a little setup on Eurgbp that I'll be sharing with us moving forward or later. So that is that. On the shorting side, which is bearish side, we have USD card bearish score of -5. I'm shorting NZD USD card right now. Okay, USDCHF also bearish score of -6. I'm not sure I have any setup on USDCHF. Okay, however, I have a trade running on AUDNZD, which is also bearish right here with a score of -7. So that said, let's quickly jump into the technical part of today's session or today's video, and we see what we can make out of the market. Let's start with my US30 trade. Right here, US30 is very, very bullish. Okay, I'm definitely going to extend my TP all the way to the top right here as time goes on, but right now, where it is very good, very cool, and I'm glad I'm just riding on with this trade. Pound USD also very bullish, looks very good. I'm still holding on to that trade. I'm currently trading up, my trading stop is around this region, so that is very good. However, I'm anticipating for at least a 50% pullback before I look to jump into another possible buy. Okay, let's say if it's pulled back to 50%, which will definitely pull my stop loss, my trading stop into a lot of pressure because my trading stop is around this region, I believe. All right, so maybe a pullback to this region, or maybe just slightly one to this region, which is this previous resistance. Then we can look for more buy opportunity on GU. But as time goes on, we see how it goes, and I will keep you updated. AUD NZD, I'm still shorting. Some of my friends, my colleagues, my students, literally, they are also shorting this trade. So we see how this goes. This is a very, very slow pair, by the way, but it looks good, makes sense. I mean, why not just short it? CAD JPY is also very bearish. It's also very bullish. At the same time, it's been very slow lately. It's actually on a little bit of a drawdown right now. We see how it goes. NZD JPY, still holding a buy trade on it. See how that goes as well. USD CAD, I'm holding a bearish. I'm holding a short trade, a sell trade on it. We see how this goes as well. And lastly, WTI, I'm still currently buying WTI. See how that goes too. It doesn't look very good right now. It's been very, very weak considering, you know, the current peace agreement, or yeah, literally peace agreement between Israel and Iran, just to stop the bombing. And that thing, I think the agreement has come to an effect since Wednesday last week. So let's see how the oil market kind of like maneuver its way surrounding the whole conflict thing, the whole agreement thing, and every other thing involved. Okay, let's see how the market maneuver. But currently, I'm buying this one. It comes down here and bounce up. There's a possibility, unless it break below this region right here successfully, then I will potentially leave the trade and probably look into something else moving forward. So that is that on my open positions. They all look very good on average, right? And I mean, as a swing trader, best I can do is just to watch how it goes moving forward. So on my trade recommendation and my top trade setup, the first pair, I have something to share on. Let me go to my entry and bring out all my entry signals, tools, the moving averages, the RSI, and the whole shebang. So starting with silver, excuse me, this is silver, not gold. Okay, right here you can see on silver, we have silver retesting this particular region right here, which is it has proven to be a very strong support region. Yeah, literally. It's been a very strong support region right here. It has been tested once, twice, 3 times, 4 times. If it comes down to this region, this will be the 5th time that this region will be tested. Okay, so the amount of time a support level or a resistance level is retested shows how strong it is. At the same time, it reveals how weak it is becoming, because if you keep pounding on the particular region 1, 2, 3, 4, 5, 6 times, that thing will probably break or crack at some point. So that's how it goes with all these regions as well. Okay, the many times they're retested, the more weaker they become. But at the same time, it's showing you that the more stronger they've been before, because they keep holding on to the price from breaking to the downside further. I hope you understand what I'm trying to say. So moving on, I personally won't really consider that region. Personally, I'm just waiting for something like 50% retracement to this region, this 50% Fibonacci retracement to that $35 region. Okay, if I can get the market can come down here, I will potentially look for buy opportunity moving to the upside. Okay, and that will be that. And by so doing, it will be coming close to the 200 period moving average. All right, and then the RSI will also be leaning towards the the 20 region, and the oversold region, and that would give me a better confidence on how I approach and buy silver moving forward. So silver is one of my top 3 setup. So have that at the back of your mind as well. We also have gold, which looks very, very interesting. Although gold has broken some very interesting regions that many people really don't think it could. However, on a short-term trade, I actually took a short on gold last week. I took that short trade somewhere around this region on the 30-minute time frame, and I closed around 1,000 p. Took it away with him, and that was 0.01, give me around $100, and that is not even a joke. Okay, so that's like 1,000 pips. So far so good. Gold really makes absolute sense, which I forecasted that the intraday short is there. I said this last week in the last video that there's an intraday short opportunity in gold, and that is exactly what we got. Okay, it fell all the way to this region. I was actually forecasting something around this region right here, but it fell all the way down here, which was very good. Now, where do we go from here? First off, we've seen that gold has broken below this 200 period moving average crazily. But is this the first time it will break below it? No. We saw it right here, broke below 200 period moving average. We saw it right here, cross below 200 period moving average. So, and afterwards, the market still bounced to the upside. Okay, it still bounced to the upside. So this is not going to be the first time, or this is not a sell signal per se. All right. For me to see a potential sell signal on gold, this particular region right here, okay, this key zone right here, it has to be broken, which is 3135. Okay, that 3135 region has to be broken. If I see a break below this region, then I can be sure that we are on a long-term bearish momentum on gold. So let's just wait to see how this goes moving forward. But right now, in my own bias, I'm looking to buy gold, because you can see for the very first time in a long time, we are seeing gold retesting this particular trend line right here. Okay, if I remove this moving average, which I'm going to do right now, let me see if I can remove it. Yes, I think I've done that. Yeah, good. So if I'm removing the moving average right now, you can see that this particular trend line, it started in 2025 January. Okay, then in March it retested it. In April it got retested. In May, more like got retested, and now in June getting retested again. Okay, this is a very, very strong trend line. So it is retesting it for the what? For the 5th time in the 6th month of this year. So now, where do we go from here? I see a potential rebound moving to the upside, probably touching $3,500 again. All right. However, so that's the first part of the whole show. I look for buy opportunity on 15 minutes, 1 hour time frame, or 30 minutes. I wouldn't really consider 15 minutes like that, but 1 hour, 30 minutes are good enough for you to look for entry on this buy on gold. However, if you get a break below this region and the market cross below 3,265, okay, cross below it, pull back, we can look for short opportunity. That means the RSI would have crossed above 50 as well, probably lean towards 70 or 65 or 60. Okay, I'm talking about RSI right now. Okay, and that would happen after the cross below 3260 on gold. Okay, and then break below the structure, pullback. I'm talking the pullback is what you now have to measure with RSI right now for you to look for that short opportunity, and that is very complicated because you'll be going against a very strong trend. So if you're going against a very strong trend, you have to get extra confluences to back that trade. If you don't get the extra confluences, then don't go for it. The last confluence that I would suggest that you look into is the crossover again. Okay, you've got to wait for the market to break below here. I'm talking about the 3265 region. Break below that region decisively. All right. Then wait for the 50 to cross below 200 period moving average also. At that time, you will see this one actually come all the way down to probably this region as well. Probably cross below, go to that oversold region. that's not the point for you to take a sell. Don't forget you're taking a sell and you're riding the trend. Okay, so after that, you wait for the pullback. Okay, this might take the whole of next week. This is a swing trading plan. Don't forget, it might take Monday and Tuesday to actually materialize. So you've got to be ready. You've got to be prepared for that. Okay, you don't just jump into it. All right, wait for that pullback, and by so doing, the RSI will also have to cross above 50. All right, after that, Fibonacci. Okay, don't forget the moving average will be acting as a resistance right now, whereas this particular zone also will be acting as a resistance. So you have two resistances: the zone itself and then the moving average crossover, which is the death cross, will be acting as a resistance. Afterwards, RSI will have crossed Fibonacci. At least 50 to 38.2 is good enough. Okay, if you get 50%, super. If you get 38.2, cool. All right. So we have RSI, we have moving average, we have break and retrace of structure, then we have Fibonacci. All right. So when you get those four things, then you can short God. Okay. If I get those things, I will short it and I will share it with my signals, with my friends on my signal pages as well. So I mean, it's just a good one. That's the same thing I did when I shorted gold on the 30-minute time frame. All right. And it was very fun. Okay. You have to wait for gold. Okay. You have to always be patient to wait for it. Once you get that entry, just go for it. Okay. Set your stop loss and have fun. Okay, with the result, whatever the case may be. So that was my two plan. Okay, the first plan is to look for buy opportunity around this region. Okay, and the second plan will be to, if you get a break below here, a nice and decent pullback, considering everything I've explained earlier, then just take a short opportunity. Don't target anything higher than what? Don't target anything higher than this particular region, 31, 35. But if gold wants to break below there, I mean, why not? So just ride the trend and see if we can cross it all the way down to 2,900. I mean, that would be very fun. That would be a lot of profit. Okay, so that's my plan on gold, and that's another trade recommendation for you. So plan for it, wait for it, anticipate for it, and when the time is right, go ahead and execute. Eurgbp is the third trade recommendation I'll be giving to you today. Personally, I would have loved to buy Eurgbp around this region, but because I'm not an impulsive trader and I have a plan, I have a trade setup, I have a rule, I've got to wait for this 50% Fibonacci to get materialized, to get actualized before I actually go for it. Okay, if I don't get 50% Fibonacci, I would rather watch this actually blow up. I don't have a problem watching a trade go without me. I'm fine. I'm cool with it. All right. So I want to see that 50% Fibonacci. I want to see RSI come all the way down, back down to like maybe this 30 or maybe 45 or 40 region on RSI. Then moving average, it should also stay above the 50 period moving average as well. I mean, 200 period moving average as well. So that will also give me better confidence in riding this trend. Okay, this is a very good trend. You can see we've seen higher high, higher low, higher high. So I just want this current higher low to be a proper low, back to 50% Fibonacci, so I can buy. I don't have any sell buyers on Eurogp right now. I'm quite bullish on it, and that is where I'm at right now. On pound yen, which is the fourth trade recommendation I'll be giving you today. You all know I've been buying pound yen for like forever. I took a buy right here, which I closed roughly around here last week, which was very, very decent. It's a very profitable trade. The plan right now is see another pullback. Okay, I always wait for pullback. I can't even buy right here. It's awfully close to the oversold. It's awfully close to the overbought on RSI, so I'm not going to take any trade right there. The plan is to wait for market to come to 50% Fibonacci. All right, rest there for a minute, see if we can get the 200 period moving average also move very close to that, using that region also as a support region, which is very good. And now let's gather enough momentum to see if we can now break this particular barrier at the top here. Okay, this 199.81 region at the top. Let's see if we can now break it to the upside and have fun in the market. If that failed to happen, then all we have to do is just to wait again, again, and again, and again, keep looking for buy opportunity. As far as this particular support region at 194 is never broken, I will remain bullish on what? On pound yen. Okay, so that is that on pound yen. Lastly, NZD/USD. Don't forget, all these trade recommendations are also here on the Edge Finder top setup. Okay, you can see NZD dollar, you can see NZD dollar right there, you can see silver, you can see gold, you can see pound, not pound dollar. Do I have pound dollar? I think I do have pound dollar, so that's good. It's only pound yen that is not recommended here, and I genuinely don't know why. Yes, we also have Eurgbp, which is very good. Okay, pound yen is the only one that's not right here. But I just kind of love pound yen, I just feel like, let me just put it right there. So on NZD dollar, it's quite simple. Okay, we've seen a very good momentum, we've seen the build up, and then considering the fact that when you look at the economic surprise middle, Kiwi is also one of the pair that is awfully strong. Okay, seems to be the only pair, actually, the only currency that is very strong right now. Among all the 8 major currencies, okay, all the 8 major currencies, literally, okay, it's the only one that is very, very strong right now. So I'm just gonna keep buying Kiwi, okay, for as long as possible. So that's just the plan right now. So it's simple, okay. I would personally, okay, on NZD dollar, All right, I would personally love to see another push to this region. Okay, I would love to see the market actually come down to this region and then build a better momentum from there. Okay, or even probably dip a bit further down to this region. Okay, build a bigger momentum from there, move to the upside, come down here, then I'll start buying from this region to the upside. So that is my plan. Let me draw this much in a more better way for you so you understand what I'm trying to say right here. Okay, I have two plans. So now I see the market come down here, break to the upside, pull back, and then I look for buy opportunity. All right. The second plan would be for the market to probably come down a bit deeper, grab some liquidity right there, break above the pull back, above here, pull back, and then I look for buy opportunity. All right. But where would I be buying? I'll be buying right here and right here. Only this top right here will be where I'll be buying. But if the market break above here, I might not really like that setup because there's no serious order. There's some orders at the bottom here that needs to be filled. Okay, there's some gaps right there that need to be filled. Once that gap is filled successfully, okay, the FVG right, once it's filled, I would love to see that build up right there because I'm not just trying to buy right now for a short term. I'm trying to buy and I'll be targeting this weekly high of this bi-monthly resistance right at the top there. Okay, I'm looking for better momentum, strong ones, so I can buy the trade up to the moon on AZD USD. So that kind of sum everything up for me today, guys. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on my socials. If you're watching this on LinkedIn, don't forget to follow me. Don't forget to connect with me as well. We can always have a conversation. If you're watching this on TikTok, please follow me. If you're watching this on IG, please follow me. Okay, support my channel, support my account, literally. And if you're watching this on YouTube, click that subscribe button, click on the notification button, and I will see you in the next one. Don't get margin call. Have a beautiful and profitable week ahead. Bye for now.